Hey, 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 it's Rebecca, and you are listening to Resilient by Design. Today, I interview Etel Igreda of Blossom CPA. This is probably her second time on the podcast. Etel is an accountant who has a team of bookkeepers, accountants, as a part of her business, her growing business, which is incredible to watch and see. And she works with interior designers, decorators, design professionals all day long. Etel and I dive into this conversation about preparing for the end of the fiscal year. We break down the difference between a calendar year and a fiscal year so that you can understand the terminology that's flying through the air. Sole proprietorship versus being incorporated. What the numbers are that you need to look to inside your business to prepare for the end of the year. I think it's a great conversation. I also share a few nuggets of my own experiences, good and bad. Etel also asks me a few questions to see if I know the right answer. And spoiler alert, I do not get all the questions right, which goes to show I still have a lot to learn myself. Anyhow, I really hope this episode helps you get into that headspace of preparing yourself for the end of the calendar year, and so that you can start the new year feeling confident about your business, your financials, and essentially that you know what the heck it is that you're doing. Anyways, I hope you guys enjoy this episode.
All right. I'm Rebecca Hay, and I've built a successful interior design business by trial and error, podcasts, online courses, and so many freaking books. Over the last decade, I've grown from an insecure student to having false starts to careers, and now I'm finally in the place where I want to be. Throughout my journey, it's been pretty obvious that I'm passionate about business and helping other entrepreneurs do the same. Each week, I'll share tangible takeaways from my own experience and the experiences of other badass women to help you build your confidence and change your business.
Welcome back to the podcast, Etel. I'm really excited to have you here today.
Thank you, Rebecca.
Let's dive right in. I know you've been here before, but for those who haven't heard your other episode, why don't you just share a little bit about who you are and what it is that you do?
Sure. So I am Etel Igreda, and I'm the director of Blossom CPA. For about 4 years, we specialized in businesses in the design and build industry. So we work with interior designers, architects, builders. So that's basically who we are. We're in Toronto, and actually the collective that you're very familiar with. And that's us.
Awesome. Okay. Well, we're going to dive right in because I love talking about finances and numbers when I'm talking with a professional who gets them. And so I think today is going to be really great and helpful because as we near, like right now at the time of this recording, it is 2022. We are nearing the end of the year. And I thought it would be a really great time to have you back on the podcast to talk about what designers, what business owners can do to set themselves up for success financially as the year comes to a close. And I know it's not time to file our taxes yet, but that's why I think it's a great time to kind of get ahead of it before the year is finished out. When we look at, paying ourselves and are we profitable? What do we need to look at? How can we really set ourselves up for success and be proactive before, the clock turns midnight on December 31st? And I know that we've previously off air talked about all the things. There's so many things we would love to talk about, but we're going to just focus it in today. And I really would love to just maybe let's just first start off about the calendar year. I want to talk about that because I think there's sometimes some confusion. And I know I was confused for a really long time between this idea of a calendar year and a fiscal year. What is the difference? Are they the same? And I know I can share what my experience has been, but I'd love for you to kind of break it down in really simple terms so that designers and business owners, especially creatives, understand what we mean when we're talking about those two things.
Right. So let's just start with understanding whether your business is a sole proprietorship or a corporation. So if you're in the first or a partnership, if you're in the first category as a sole proprietorship or a partnership, you're filing within your calendar year, just like you do with your personal taxes. In fact, your business will be filing within your personal tax return, right? So it applies that your calendar year, your business is calendar year. When it comes to a corporation, so if your business is incorporated, then you're going to have a fiscal year, which may not always line up with the calendar cycle. So you may have, for instance, a year end on September 30th or June 30th, any end of the month. So that's the difference. And then you have 6 months after that fiscal end date to file your corporate tax return. Does that help?
Yeah, that's really great. And I'm sure people listening would like to know, well, what would be the point? Like, why or how does it even happen that your fiscal year, meaning your business financial year, is different than the calendar year?
So most times you want to have a different fiscal year than a calendar year because you can defer taxes. So for instance, if you got yourself a bonus recorded in the books as belonging to a fiscal year end that ended on September 30th, you have 6 months later to pay it out to you. So say with that example, you have a September 30th year end and your accountant and you have looked at the numbers and you realize, hey, there's money to pay me a bonus as the shareholder. So the business has until March of the following year to pay you that bonus. So that what happens is then you as a person will be declaring that income in the following tax year. So that's the tax deferral. So you're delaying when you are declaring that income.
Yeah, I think that this can get a little, the more you talk about it, the more you experience it, the more you understand it. But I think it can get a little confusing at the beginning. I know I really struggled with this. My fiscal year for my company ends July 31st.
Yeah.
And the reason that is because I incorporated my business in and around July. And I wasn't really thinking, and that was the start date of my business. I know now that there's flexibility, I think, when you're setting up a corporation on you pick your fiscal year.
And of course, exactly. So to your point, say for instance that you incorporated in February, but you talked to your accountant, they understood your situation, and they may recommend that the first fiscal year of your business closes September 30th or July 31st, right? So you don't have to have a full 12-month cycle the first year. Does that make sense, right? Mm-hmm. So you don't have to. But going forward, then there's got to be the 12-month cycle will continue, right?
Yes, right.
Okay, so the first year you don't have to. You could even incorporate on January 1st, say, but you choose to end the first fiscal year June 30th, because that's after conversation with a financial professional, it's the best situation for you, right? It's more advantageous to you.
Yeah. And I struggled at the beginning because I didn't like it. For me, it felt confusing because I think in calendar years. I feel like we grow up that way. We think January to December, like the calendar year is January to December. And then we start on January 1st. It's a new year. So it took me a really long time. And I feel like I'm still wrapping my head around profitability and like, how did you do in 2022? Well, 2022 just started for me. right? Or just ended for me. And so it would get kind of confusing. And there was a period of time where I spoke with my accountant and I was like, can we just match these things up? Like, what is the benefit? Like, can't we just have everything? And she said to me, and now in having had experience, I see the benefit to exactly what you said, because my company's fiscal year stops July 31st. I can see how the company did, and then I can decide if I'm going to pay myself out of that, and it will contribute to the next my calendar year's personal income. And I don't want to get too caught in the weeds here, because I think this is not a conversation for everyone. It's only if you're incorporated, it sounds like, right? Etel, if you're a sole proprietor, yes, then you don't have to worry about this. But this is once you incorporate and you have a separate entity, your business becomes a completely independent entity from you. And that's not what we're here to talk about. But if you guys are interested and you're listening, you're like, what? Tell me about incorporation. That's something we could definitely have a conversation about in the future. But I think that that's just an important distinction, because as we start talking about what you can do at the end of the year, it'll depend if we're talking about your personal income or your business. And today we're going to talk mostly about your business.
Exactly. Yeah. And the goal is that, because like you said, if you are incorporated, it's a separate legal structure. You need to think of almost like two people, right? Your corporation's one person and you're a separate person, but they need to work together, right? To benefit from the tax deferral options, right? From not having to pay tax at the same time. Whereas when you're a sole prop and you're making decent net income, and that could be different for different people, you don't have that option, right? And we'll get into that, later on,
Yeah, absolutely.
But that's basically why businesses incorporate.
Yeah. And it is complicated at the beginning when you're first kind of dipping your toes in the water of this whole idea of being incorporated. And that's where we really recommend that you work with an accountant and a bookkeeper, like work with a professional to help you through this, because if you do not have the experience in this world, it's going to be super confusing. And that is completely normal. I'm saying that because that's been my experience. So if I went through it, I'm assuming it's normal.
Yeah, absolutely.
Then I want to talk about that a little bit later, to the benefits of working with a professional. And clearly that's just one of them. But let's talk about profitability. What needs to happen? What needs to happen for an interior designer to assess their profitability for the year?
Okay, so first, we want to make sure that we have added so I'm talking a very basic level, not involving software in this conversation, just if you were just doing it in a spreadsheet per se, okay? We want to add all the invoices that we have issued for the year. So, okay, let me just backtrack that. So the first thing we need to have clear is that most businesses, interior design businesses, are not cash-based. What that means is that we report revenues and expenses based on the date that we issue the invoice. So say you're a sole prop and you invoice something on December 31st, 2022. Is that going as your income in 2022? Or is it going on your income in 2023, provided that you got paid in 2023? What would you say is the right answer, Rebecca? I'm putting you on the spot.
I know. Okay, wait. Repeat I'm like listening.
The invoice was issued December 31st, 2022, but the client paid you on January 10th of 2023. Is that income to be reported in 2022 or 2023?
Okay.
And remember that
I'm going to answer.
We're not cash.
Okay, if I get the wrong answer, you'll tell me.
Yes.
My answer is, it depends. It could be captured in the 2022 revenue, but if you wanted to, you could defer that to 2023 because the money didn't hit your account till 2023, or is that wrong?
So unfortunately, the answer does not depend.
Shucks. Okay.
Because you are not, that was kind of my hint. Interior designers are not cash based. So it doesn't matter when you collect it. Or you could even not collect the money, unfortunately, but you would have to report that income. If you're a sole prop, you would have to report it in 2022 because you are recording your income based on when you issued the invoices, not when you received the money.
See, this is where I don't
This is
disagree with you. Obviously, you know the rules, but in the past, I can tell you what I have done is
Right.
because we've issued an invoice, but the balance has not been paid for a very long time, and it'll go into the next calendar year. My accountant has deferred some amount of revenue because it hasn't come in yet.
Okay, so the way that could happen if it was like a retainer, which is a different
deposit
thing, right?
versus a balance paid.
Right. Because we're talking, like if you're saying, okay, I took a retainer from clients. Again, retainer, you haven't fulfilled any of your obligations towards your client. So in reality, if you were to walk away from that project, you would owe those people that money back. It's not, you didn't service them.
Do any work.
You did any work.
Yeah.
So I
we
can
collect
see how
the
that
money.
could happen. Right. But provided I say you have done the install on December 29th, and you're like, okay, so I can send the invoice, it's December 31st, that is income that should be reported in 2022.
Got it. So the example that I'm thinking of from my experience was we collected, let's say, $100,000 from our client towards purchasing our time to implement the construction, but it was only a few days before my year end.
Right.
That is a situation where that revenue was deferred to the next calendar year because we hadn't done any of the work or placed any of the orders yet.
Correct. And that would be 100% acceptable.
Okay. That's a really helpful distinction, I think.
Yeah.
Okay.
So to the line of that we were talking about how to organize ourselves. So one is all the invoices for services and products that we have placed on behalf of the client. Then another bunch of separate income per se would be the retainers, which we already addressed, which are not sales, right? It's just cash coming in, but that's not a sale. That's not income to your business yet, right? Then we would summarize all the expenses as best as we can, as best as we have throughout the year. And we would summarize all the assets. So assets would be things like furniture, computers, printers.
This is the part I don't understand.
So we would want to create a separate list.
This is the part
Okay,
I don't understand. But my accountant's like, oh, and you have this much in assets. I'm like, what the heck does that mean? I have had this computer for 5 years. I've had these, I don't understand that aspect. I don't know if I ever will. I don't understand that. And I don't know that you'll be able to explain it to me now, but maybe you could try.
Maybe I'm going to try. I'm going to give it my best shot here. So assets come in a different report that's called the balance sheet, right? So we have assets, a section for assets, which is basically if everything that the business is worth. So we would look at your cash, meaning the balance in your bank accounts, right? So that would be current assets, meaning anything that if you owed a vendor, you would pay from that cash balance, right? From what's in the checking account. And a long-term asset is considered something that loses value, but it's still valuable to the business. Like if a vendor came and said, Rebecca, you owe us money, technically a creditor could come and see, okay, what are the other assets this business owns? And let me just take it as a form of payment. Does that make sense?
Yeah, that makes sense.
An asset has value to your business. It's added value. If you bought equipment, say, right, you could sell that and with that pay your creditors. So that's an asset. Yes, it loses value. You're right. So 5 years ago, you bought something and it was $5,000 then. And every year your accountant will take
Depreciation.
Exactly, a portion of the value to accommodate for the fact that it's worth less.
Right. Okay. Okay, so that's something that an accountant can help with, I think. I would highly recommend that.
Oh yeah, like assets, that's why you have to separate it from expenses, but they do add value to your business, and you do want to separate them because they will become a portion of it will become an expense to your business when you file taxes. Only when you file taxes. It's not real, right? It's a subjective loss of value, right?
Interesting.
Mm-hmm.
Okay, so in order to assess your profitability, you need to look at the revenue that was collected or that has been invoiced, right, to be collected. Look against your expenses and your assets. Anything else?
No, I think that basically should put together a full picture, right? And then that's where we start organizing it based on your bank statements, right? But this is where it's important again to the point of not being cash based. So you need to have those bills to see, for instance, a vendor charge you $10,000 on December 31st, same example, okay? But you only send a deposit of $5,000. When will you be recording the full expense of $10,000 in 2022, or you would just be recording $5,000 in 2022? What do you think, Rebecca? Same logic of the other.
Well, I would say the vendor issued an invoice for a deposit.
No, the vendor issued you an invoice, a full invoice saying this thing is going to cost you $10,000.
Right.
Okay. But I only require today a deposit of $5,000. In your books, your expense, will you record $10,000 or $5,000 in 2022?
You're asking some really tough questions, Etel. I did not expect to be put on the spot. I don't know.
That's really important difference.
I don't know. I'm not paying attention to my accountant and my admin are doing this, but this is good to know and learn. Yes. I would imagine the entire thing is an expense.
Correct. The entire thing in 2022. Yay. You got it.
I got 1 out of 2.
That's good. Well, I can ask more. Maybe your average will improve.
So that's an expense. So that's super helpful for people to understand.
And this is why it's so important. These are very simple examples, but I think they highlight how much business owners don't know about their own books, and they think, but anybody can do that, right? Not really, because you need to understand what you're looking at, right? And you need to understand, especially in those times where we're finishing a period and starting a new one, we want to get it right?
Yeah. It's interesting. I have so many designers in our community, in our Facebook group, in our course in Power of Process, even inside Designers Room, which is our membership with the designers who've done Power of Process, who now have a bit of experience. I still get the question all the time of, I don't know, I've been thinking I should hire a bookkeeper. What do you think? I mean, my immediate response is always yes. Because I literally remember, and it's funny because if you're watching this, I don't know if this is going to be live on video ever, but if you're not watching this, I am recording from my son's bedroom. And this was actually my first office, actually my second office. This room used to be painted a pretty shade of little turquoise. And I had designers working, I had clients come for presentations in here. And I remember being on the carpet, because this used to be carpeted before we changed out the floor and did the reno, being sprawled out on the carpet around tax time, probably late. I always filed late. And I literally had a shoebox and some Ziploc baggies of receipts. And I had them all over the floor. And I just started to create piles based on category. And these were receipts for probably 12 months. This is not a monthly exercise. And I probably did this for 5 or 6 years of running my business.
Oh, wow.
And even before that, when I was working for another designer, I was an independent contractor. So technically I was a sole proprietor. So I still had to file my taxes in that way. And I didn't have as many receipts back then, obviously. There wasn't a lot of expenses. It was just my time that I was billing. But even so, it was the car, it was anything for the office. And I was always late because it was such a daunting task. If you've ever had something that you don't enjoy, is a big task, you always put it off. Or if you're like me and you're a procrastinator, you put that off because, it's going to take, and then until finally the accountant's like, what's going on? I need the information. I'm like, damn it. And I would literally sit there with piles of receipts, and then I would go through them and I would circle them. I would highlight them. I would write what it was, and I'd put it into an Excel document.
Wow.
Probably I was missing receipts. I was not
100%.
comparing paper receipts with my bank account. That's crazy. That's so time consuming. I was not doing that. I know now that has to be done.
And Rebecca, did you ever encounter that you're saving this receipt and now the ink is gone and you can't see anything?
Oh, probably. Half the receipts were missing. Let's be honest. Or anything that was an online purchase, I didn't have a paper receipt for. So then I'd be searching in my email for something. But I was not looking at my bank statement, crossing things off, saying, yep, I have the receipt for this. Yep. Like, I did not do that. And I still filed my taxes. So I don't know how accurate everything was. But I probably, if anything, it hurt me. I underreported the expenses I had, likely. Until I hired someone. First, I hired an accountant, to be honest. I did not start with a bookkeeper. I started with an accountant because I needed someone to file my taxes. And then from there, as the business kind of got bigger, that's when I realized I needed to be on top of it on a more regular basis. And so that was only in the last 3-4 years that I had someone who started reconciling meaning crossing off everything that went through our bank and our Visa with all of our receipts and inside our design docs monthly. Like, it's only been in the last 3 years. That's how long I waited. So if someone is listening, if there's a designer or a creative entrepreneur listening to this podcast and you're like, oh my gosh, I don't have someone, don't sweat it. Don't sweat it. You're already listening to this episode. Like, now is the time to bring somebody on to help you. I don't know, Etel, that probably horrifies you to think of somebody running their business like that. Your face is like, oh my God.
but at the same time, I get it. It happens because you are focused on landing those projects and making those connections with your clients and really providing a really amazing service. And so this kind of falls in the very last of your priorities, right? And like you said, you just wait till the very, very end. But if you're really looking to grow your business and be established and be taken seriously, this is one of the things that you need to do and get right, because you don't know how profitable your business or your project is until you do this exercise, right?
Yeah. I mean, so like, hearing my story, assuming there's other people like that, what do you recommend people do? Like, should they start with a bookkeeper, or should they just go straight to hiring an accountant? Like, is there a better method?
I really would think that the foundation has to be there. I would say that you want to start with a bookkeeper so you get at least the basics done. And it's with somebody who is either an accountant or works already with an accountant, so they can work as a team if they happen to be two people, right? That's always advisable. I mean, the rate of a bookkeeper is going to be cheaper than the rate of an accountant. So you may want to start with a bookkeeper just to get yourself started and just set up properly. And you can just ask very transactional questions, I guess. But where you are going to need an accountant, perhaps it's going to be when you're thinking about incorporating, when you're thinking about making big decisions, where you're wondering about more complex things, and even that they tie to your personal life. If you're incorporated, for instance, right? And you're like, okay, I'm thinking of doing this. Does it make sense? How would it affect my personal tax, right? That's when you would need an accountant, right? But I mean, to just tackle the tax year frenzy and not have it to be like that. Yes, start with having good books, right? That's the foundation.
Yeah, I know we're kind of jumping ahead about like why you need to hire a professional, but I feel like my example is a great example. What I would say too is just to your point, what you just said about the personal and the business. Like I find that accountants are really helpful for helping me understand, how much should I or could I pay myself? What are the ramifications if I do? How much could I potentially, put into RSP, like a retirement savings plan? How much, like, for example, there's a situation that I'm about to go to my accountant with, which is my car that is leased by my business is up. The lease is coming up. And we've decided that it makes the most financial sense to buy out the lease because the kilometers are super duper low. And with what's going on in the car industry right now, it would be very expensive to get into. Just the same car in a new lease would be substantially more based on interest rates and availability. There's a serious shortage of cars and product. And so the question is going to be, okay, who buys out the car? Do I personally buy out the car and then lease it back to my company? Does my company buy out the car outright? And I think an accountant can help you understand the nuances so that you're not just you're looking at how does it benefit you and the company? I don't know if that's the right way to look at it, but what is the best longer term solution, right? So, okay, is the company going to save a bit of money here, or is it going to can I benefit from that if I lease the car to my company? Right. And those are questions I don't have the answers to.
Exactly. And then at least also, and the most important part, I think, is that you are making a decision that you understand why you did it. You know what I mean? Somebody explaining to you, okay, this is why you would do A as opposed to B. This is what I recommend. This is my logic. At the end, of course, like we said earlier, the business owner is going to make the decision. Did we say that, or was it before?
We said that offline. You can say that again.
At the end, the business owner or the individual, the taxpayer is going to make the final decision, but the professional is asked to advise, right? And that's what we do. And then the person will make the choice that they decide on, and they're going to have to be the ones who live with the consequences, good or bad, right? Or not so terrible. Sometimes it's not like, terrible and great. It's just slightly better, right?
Yeah, and sometimes the differences are very minimal, and it's just understanding what makes more sense for you. But I think it's important to understand that an accountant can help you with the business and the personal. Like, even though you might be filing your taxes separately, there's still a connection. You may not be sole proprietor, but you're probably the sole director of your corporation if you're incorporated, like I am, right? And so it's understanding, it's no different than was it last year? Like, we hired you, Etel, to help me make a decision about purchasing the farmland, which, by the way, nothing has happened. We're sitting on the land because it's so expensive to build. But I was trying to figure out pros and cons of, do we create a new numbered corporation? Does my existing company buy it? Do I buy it personally? And you were able to help us kind of walk through the pros and cons of the long term. If you do this, then this could happen. If you do this, then that could happen. Ultimately, the decision was mine to make, but I felt like I made an educated decision, which is what you're saying.
And I think that that's so important, right? Because we want to feel that we understand when we're trying to play in fields where we've never played before. We want to feel like we know why we're doing what we're doing, right? So it's very important.
Yeah, absolutely. Okay, so knowing all of those, and like to be continued, what I do with my car, by the way, some accountants say your company should not be leasing the car, la, la, la. There's all kinds of different, I would say two. Sorry, say that again.
Approaches. Yeah.
Approaches.
It's like a lawyer, same thing, like one may take it one way, one is looking at it this way. Like if you go to a lawyer for an issue, some will look at it differently, right? It's professional judgment sometimes, right? It's not just numbers sometimes, right? It's also the risk of audit or reviews that it could expose the business or the business owner, right? So
and it's so true. It's this is how we started. I mean, I guess I could share it here. We were like, oh, we'll talk about this in another podcast, but you just brought it up. Before we went live, we were talking about that because it is a professional opinion. You don't have to always take it. And everybody has a different approach, like you say. And, my husband and I joke about how some accountants are very conservative.
Yes.
And others, they can color a little bit outside the lines. They get creative with how you can do things. And there is a spectrum. And my husband always jokes, there's this one accountant we know, and he always jokes that he's like, they basically work for the CRA, meaning that they're so conservative that they just, it's the letter of the law, but the law can sometimes be a little, you can interpret things differently. And so a few years ago, I was telling Etel offline that I had said to my accountant that, the miles that I was on my car, they were like 90% for work. And at the time, my accountant was like, well, that's really high. Like that's a red flag to the CRA, which is the Canadian Revenue Services. For those Americans listening, that's a red flag. They're going to audit you. And I was like, well, let them audit me, because honestly, that is the truth. Like I almost 100% use my car for work because my husband has a car. I'm not taking on the weekends. It is not something that, it's not something that I feel like is negotiable. Like I'm not going to say it's lower. Like I deserve that money. And so I did it. And I submitted I filed my taxes. And sure enough, several months later, I get a letter in the mail from the CRA saying that they were auditing me for my automobile expenses. And I had a mild heart attack because I thought, oh my gosh, I'm going to jail, even though I didn't do anything wrong. And unfortunately, what I had to do is I had to pull together all this documentation for the CRA saying, like, basically itemizing every single trip that I had ever taken with the kilometers to this upholsterer back and forth per month for an entire year. And I hadn't been really tracking it. So I basically had to recreate using my Google Calendar all of my kilometers because I was determined to prove to the CRA that I used my car 90% for work. And I submitted, it was all printed, and I put it in a registered mail. Like, talk about the time. It was ridiculous how much time it took me to do it. And I got a letter back from them saying, thank you very much. This case has been closed. I was like, yes. So I proved it. And I think I've shown them not to mess with me in the future. But would I do it that way again? Not. That was really time consuming. So moving forward, I'm going to claim a little less than 90% use of my car for work. Just because I don't want to be audited. So that's a perfect example of how my accountant advised one thing. I was like, that's very nice of you to make that recommendation. I'm not going to do that. And well, that was the story of what happened to me. So I recommend you do listen to your professional accountants.
Yeah, that would be nice.
I know. That probably not always happens. Okay, we kind of digressed there, but I think it's an interesting conversation. What other numbers? Like, which numbers should designers look at as we're nearing, the end of the year?
So let's say we have organized, we have our expenses, and we probably want to separate into somewhat bigger categories the direct expenses that are directly related to projects, as opposed to the expenses that are just what we call overhead expenses or fixed expenses. So expenses that the business incurs, whether they are handling 3 projects or 30 projects. Okay. So that will help us if we know, okay, this is how much money a project brought in. This is how much it costs to provide that service to that particular client, say in terms of hours from contractors, in terms of billable goods. That will give us another number, which basically is our gross margin, right? The margin that we made on the sale to that particular client. Does that like,
yeah,
does that add up?
funny. Yeah, like the margins, that stuff I find, I've done a few podcasts talking about that. It's hard to explain sometimes.
Yes, because we almost need exactly, yes.
Just using audio. And that's why we had a VIP day earlier this year where it was like a full day event where we dove deep, and I had guests talking about, my operations manager talking about like breaking down profitability, because it can feel complicated. So if you're listening right now and you're like, okay, you lost me, that's okay.
Don't worry.
Exactly. It does take time.
Yeah.
So like, as we're nearing the end of the year, is there anything designers need to do?
I think that going back to what we mentioned, once you have everything put together in terms of all your invoices, all your expenses, going through your bank statements and making sure that you have an explanation for those transactions. What often happens is that we may mistakenly use a business card for personal purchases. We need to extract those transactions out of our business expenses, right? So that's kind of the exercise with the bank reconciliation. Again, it could be a little bit complicated to explain in great detail when we're not together, right? We're not sharing basically screens, and we don't know what system you already, business owner, you have in place, right? But that's in general what I would say in terms of getting ready, understanding your mileage, understanding your home expenses, right? So that will be basically like listing all the home expenses that are applicable for sole proprietors, so that again, your accountant will do the ratio of, okay, your square footage at home, you use so much square footage for your home office, and the total square footage is this much, and say that is 15% of your total home. So 15% of your utilities can be applied as a business expense if you work from home for more than 50% of the time. Okay.
Which nowadays probably a lot of people are. And a lot of designers do work from home. I worked from home for years before I got an office.
Yeah. So those would be the basic places to look at, right? To get yourself organized and ready to meet a professional to help put it all together.
So you're saying you have 6 months from the time your year ends to file your taxes. Is that correct?
For a corporation, yes.
For a corporation has 6 months. Whereas individuals who are not incorporated, is it 3 months?
Basically 3, right? Because we have to file by April 30th, right? So if you think about it, really 2, because you want to have everything ready, say by the end of February, and then give the other 2 months for your accounting professional to file your taxes. Right?
Yeah,
and get all your slips.
I had a situation for a few years. I was getting frustrated because, I wasn't doing anything about my year end. And then my accountant would say, okay, it's time to file your taxes. We have to file in 2 weeks. And I was like, okay, well, I'm busy or I'm out of town right now. I would continually file late because I wasn't being proactive at looking at anything until the last minute. And I kind of blamed my accountant, but ultimately I needed to be clearer with my expectations, my accountant. And I've said in the past couple of years, I said, I don't want to wait until the month before I have to file. We need to look at this during this, like a few months after my fiscal year end. Because I know there's always a bit of back and forth. There's decisions I need to make. And so I'm actually meeting with her next week to look at, because my fiscal year, as I mentioned, ends July 31st. And so I have to file, I think it's end of January. And so I've said like before Christmas, I want everything sorted. So January is just file. Because there's always a question. Like she already had a few questions for me. She sort of was like, okay, like, looks like you've still got rent checks owed. Like you haven't paid certain months of rent. And I'm like, oh, shoot, I haven't, because I paid to my husband. I'm like, oh, shoot, he has to invoice me because I sublet, right? I sublease from him. Or there was a couple other questions about, I'm trying to think, like just questions that would come up that take me some time to figure out. One of them was the car. How much of your like mileage, right, is going to be written off? How much, are you going to pay yourself a bonus? Let's look at the year and let's determine if that's feasible, or do you want to keep the money in the company? And so these are the questions that, and I'm sure there's more questions that aren't coming to top of mind right now. I'm going to have the car question, this is a new fiscal year, but just looking at, are there opportunities? Are there other expenses that I didn't even remember or think of or consider or know? And so give yourself that time to look and say, oh yeah, I never really considered that, but that is definitely an expense. Or like you said, the revenue coming in, like that money came in, but we really haven't executed or done anything because we're waiting for permits. Well, maybe that revenue isn't for this year. Let's defer that revenue. And someone might. So actually, now that I'm hearing myself say it out loud, I bet there's someone listening who's wondering, why the heck would you defer revenue? Don't you want to make as much money as possible in your given year? What would you say to that?
So the point there, the counterpoint to that would be, aren't you planning to, if you're planning to make more money the next year, then you want to phase it out, right? Again, you want to defer paying taxes. So if you want to pay extra this year, why would you want to be paying extra this year, right? When you can put it off for another 12 months or so, right? That would be the logic.
Yeah. And there's nothing wrong with wanting to pay less tax. That's just part of keeping your business rolling and staying alive.
And it's part of cash flow. And to your point about the conversation, once you're ready to file, if you are incorporated, then you also want to talk to your accountant about maybe personal plans that you have. Maybe, my salary should be increased next year because I'm planning this big personal trip with my family, or I'm planning, or we're thinking of doing this investment, but not within the business, but as individuals. Or there could be a myriad of things that could happen that you're planning for, that you want to have those conversations when you're closing your year, because that's prepping up for what's to come, right? Yeah. And then that's why, like, to that example of deferring your income and saying, okay, that retainer doesn't have to go as income for this year, because, okay, if I have more income, but then I'm also increasing my expenses, my net income at the end, what I'm going to be reporting for taxes is going to be less next year. So it's going to go hand in hand, right? Yeah. So we want to keep that in mind. And I think it's always a two-way conversation. It should always feel like a two-way conversation. Yeah, your accountant has a lot to tell you, but you also have a lot of information that you want to share so that they can do their job better, right? So if I know what your goals are, if you're saving for something big, it always puts things in perspective of what your goal could be for the business for the next year, or what we're trying to attain for the next year.
Yeah, no, I think that's really helpful. And that's why having a professional in your corner who can help guide you and ask the right questions can be super beneficial. Okay, we've run out of time. Before we sign off, I want you to share your last nugget of wisdom. Do you have something you want to share? Anything that we haven't maybe touched on, or just let people know the value? You let me know. What nugget?
I think that I want to leave off saying just that try to be as proactive as possible. Like, there's no harm in starting earlier and just really understanding where you're at with your business, because if you don't know what's happening today, you cannot project for next year, right? So oftentimes we're like so focused on 2023 or the next year or the next quarter. We need to look at what we have right now to be able to move ahead.
Yeah, don't get too ahead of yourself until you continue to look at where you're at. Yeah, I like that. That's so great. Okay, where can people, if anyone here who's listening is like, oh my God, I need to know, I need to follow, I need to connect with Etel, she needs to help me, where can they find you?
Oh, so you can find me on Instagram, Blossom CPA, on our website, www.blossomcpa.ca, and via email. My email is Etel, Etel, @blossomcpa.ca.
Amazing. Thank you so much for joining me today on the podcast.
It was a blast. It was amazing.
Well, I hope that was helpful. I hope there were some little informative nuggets. I know it's always beneficial to repeat terminology, go through examples to help us understand how it applies to our business. For many years, and still, obviously, I'm still learning, but for many years, I struggled with aspects of the accounting side and the year end and understanding the how to prepare to file your taxes and all that jazz. If this is an episode that interests you, and if you'd like to hear a little bit more about tax season, calculating your expenses and things like that, let me know. Send me a DM either on Instagram or inside the Designer Meetup Facebook group. Make a post. Let's share. Let's have this conversation, because I'm happy to have Etel back, have other professionals come back and talk about the business and the number side of running a business, because it is sort of the thing that no one really wants to talk about, because let's face it, as a creative, it's kind of boring. But unfortunately for us creatives, it's kind of essential. Anyhow, I hope you enjoyed this episode. I'll see you soon.